Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, June 2nd, 2022. I'm going to dive right into the markets today simply because I've made what may be interpreted as a major labeling change here on the daily chart, which of course affects the other charts above and below. So last couple of days, including, I have to go back to last Thursday, Friday, and then the first 2 days, and now today, the market continues to basically point higher. And not that I'm overly bullish, because I'm certainly am not, but the market did do what I had basically said it needed to do today to give confirmation that the intent was to go up. The intent was to possibly complete 5 waves up off of that 11,491 low. Now, when I look at that 5 waves up, under the count that I had, that this was a 3rd wave and that we were moving up in a 4th wave, which suggests that it would just be wave A of minor wave 4, which would put that minor wave 4 way too big. So I went back out. I went over to an alter account. I know that I spoke about this either in the last podcast that I did, which reviewed the larger picture, but if not, then on one of the other updates. But I discussed the possibility that from the 15,268 high to that 11,491 low was only minor wave 1 of intermediate wave 3. Now, that doesn't toss us all into just a little bit like, what? It should, because what it does suggest is that we're in a wave 2 and we still have the largest portion of this 3rd wave to come down. Now, a couple of reasons why I'm doing this. The market is really boosting itself higher on what I continue to look at as a false narrative. So trying to grasp onto the bullishness in terms of a longer term picture doesn't necessarily fit. But what does fit is that I can go in every day and I can trade that upside with an understanding that my anticipation or my expectation are that we're likely, if we're finishing a wave A, we're going to B wave decline, maybe comes down 50% of what we've just done, and then it rallies back up in a C wave. And that goes and fits with what many other people are looking for that don't do necessarily Elliott. They're looking for higher levels based on whatever they're basing it on. But if I can put it into the context that this is corrective and counter trend, it keeps the trend in place. It keeps the larger picture that we're in a much longer, larger corrective phase in place. And it's not a matter of being right or wrong. It's a matter of I'm trying to keep up with the price action on all of our charts, but also in terms of what the moving averages begin to tell me, how things are trading, how does that fit in? The fact that we basically have had a long string of days now where the volumes have been very low. Many days absence of sellers. So to me, it's like the sellers came in, did what they needed to do on Tuesday and Wednesday. Today, they were almost non-existent except right in the first thing in the morning. So I'm going to drop down to that hourly chart. And let's open this up a little bit here. So this is what we got. We got an additional new low for the whole sequence this morning at 12,442.50. And we end up at 12,898. That's a gigantic turn. So, and through it all, hourly chart, first hour, red, then 1, 2, 3, 4 straight hours up. And then the 5th hour, we had a little bit of downside. So it was a red bar, not much, and then a very strong close. Now, so this becomes part of what might be a little bit larger completion of this. And if that's the case, then maybe we do get up above 12,000. Maybe we do actually get close to 13,000. And it would continue to be corrective. So let's go out, back out to the daily, and now I'm going to look at the Fibonacci. These are Fibonacci retracements. If this is indeed a minor second wave, What can we expect from it? Well, it already almost tapped on the door at 38.2%. So the retracement of a 38% retracement is right there at 12,933, 934. Right above that, we have the 50 at 13,075. Now, if they really decide they're going to tack on an additional 300 points tomorrow, we're above 13,100. But if they want to come in less, but still push all of these components higher for expiration, go at it. But my point is that I don't feel that the buying is on sound ground. So in other words, I kind of think it's a bit of a setup, because don't forget, if traders get to a certain level, because that's where they can get out via options. If you're looking to exit a stock, you're going to want to get it at a point where if you have the puts become usable. And if you are going to be selling stock, it is an area that you're going to want to do it. So you want to get these strikes in alignment to what you need to have done. So how you need to come out. So expirations are periods where things get settled. And so sellers can settle, buyers can settle. And so I'd be looking at there's going to be a lot of the bigger boys, I feel, want to get out at these higher prices. And that's where they're taken so they can justify other things that are going on. We have Amazon. Amazon tomorrow at the close, that's it. If you're in, you're in. You partake in the 20-for-1 split. If you're not, you're not. You wait till Monday and then you can go grab it there. So we now saw Amazon go up another $76, and its bid actually another $14 above the close. So basically we're hovering around being up 100 again, but we're above 2,500 bucks. And so that may continue as we get maybe people that were waiting to see if they can get it cheaper, whatever, I don't know. But if they're short and they don't necessarily want to be short 20 times that amount, you're going to get out of your short. So there could be some of that tomorrow. We have Google continuing to power higher. We have Facebook continuing to power higher. But these, I think, are more of an expiration play. Google also coming to split in July, so it might have some of that. We're seeing things get pushed higher that I don't think will be sustained beyond the expiration. And that I could be wrong. Now, how do I fit that into what I'm looking for? Well, if this is going to be wave A and we get it to top out wave A here and the market turns lower and we can do an ABC down, that'd be a B wave. Then we get a C wave up. But I need to get this initial 5 waves, which will form wave A, complete. Once that's done, well, then we know we can put our retracements down and look at where wave B is going to come in. Now, once that's done, we'll also know where we're going to put in a C wave and how high it could get. Now, in total, as a second wave, the most common area for it to get to is the 50 to 618% retracement. That's in a wave 2. So that would take us up to 13,380 to 13,825 as possibilities. That would involve a break above the 50. Now, if I don't think it really should do it with power, but it could. They could just power this whole thing up and just go for it. And again, in the absence of sellers, which we may run into again tomorrow. So in other words, there's no strong sell pressure. They're not showing up because they've all come in as buyers or whatever the situation is. They're just going to stand back and let this happen. And it's possible because they want to see the higher prices so they can start selling again for themselves, what they need to get out at. Not for themselves, it's just that's where they're going to get the sellers. So all kinds of things for reasons. One of them is that I'm going to have a hard time really adopting to, well, the Fed's going to get a little dovish and they're going to pull back and they're just going to hold off and they're not going to raise until September, blah, blah, blah. Well, That would be the regular meeting. So maybe they're not going to do it in between. So we get a little break over the summer. Okay. Doesn't mean that inflation is going to take a break. Because I guarantee you inflation will continue to go up. Just look at, we got to go to the pumps to buy gas. We got to go to the grocery store to buy food. All of those things are not just going to take a break because the Fed's taken the summer off. Not going to happen. So inflation will continue. And I believe the numbers will continue to report it as such. So in any case, I don't think we're seeing any major changes. So what we want to hang our hat on, our hopes on, in terms of a continued rally may still happen. But to me, it's not long term. It's not even midterm. It's a short-term rally. And it will come in as an ABC. And this A wave, being 5 waves up, puts a lot of fool's gold into the market. So I'm going to stop there and continue to say for tomorrow, coming back down, the hourly is not as clean as that daily because the hourly is just, shows all this mess in between. But I would suspect that we should see a continuation to the upside. Now, this may all occur once Globex gets started and then overnight. So we'll see where it is by the time we get in the morning. But I would suspect that they may want to push it even higher, depending on where it is, because of expiration. We'll see. But on a break above 12,934, we start to get a little bit room. We get a little bit of room there. Do I think that the NASDAQ could rally from 29 to 2934? Yeah, that's not much of a stretch. Could it then add another 400? I suppose. But is that what I would expect? Not necessarily. But I think we need to be prepared for everything. Right? A break above this, a break above the 50. Strong enough break above the 50, it brings a lot more buying in. Then we're headed for 13,380. And that may be without the B wave. So if this 1, 2, 3, 4, and this 5th wave, and also just on the other side of all that, if this reaches it, and then what they do is pull it back in Globex, so we can get a small 3 in, maybe back down to here, and then rally again, perfect. Then we're doing an ABC. So as long as we're able to say, okay, I got the 5, that's a wave A, and I got the 3, and that's a wave B, and boom, I'm going to have a C wave up, then it's clear. And I'd be counting it on the daily chart. I'd look for it on the hourly, but I'm going to confirm it on my daily. So these continue to point likely higher, but today kind of was a garbagey day unless you just kind of got in and held. Got in and held, it was extremely profitable once again. And it was not that difficult just to kind of buy on maybe an extra contract or 2 so that you're trading more than one. If that's your style, that was pretty easy to do too. And you didn't actually have to take a lot of heat waiting it out for the next strong buyers to move in. They were pretty regular. All right, I am going to leave it there. Continue to use the moving averages, use the Fibonacci, use the Elliott wave pattern because I'm looking for just an hourly top, even could be a daily top, but a top that's going to create a little bit of a downdraft in the form of a B wave. Now, once you get that high and we get it heading lower, you can run fibs from the high to that low, and you're going to get the retracement levels for wave B. All right, I'm going to leave it right there. I'm going to wish everybody a really great trading day tomorrow. Keep your focus, keep your eye on the price action. Don't get married to the bullish scenario. Don't get married to the bearish scenario. Just trade the price action. And our next update will be on Sunday, June the 5th.